Hey guys, welcome back. In today's video, we are talking about the huge AMC breakout, staging for a squeeze, how more short shares have to be covered, and many more in this video. First, we're taking a look at this. Goes without saying, things are looking bullish for AMC. So once again, when we take a look at the sentiment for AMC, you can see that it's still extremely bullish. Now, the reason why I wanted to bring this up is because for me, this gives a forecast of overall what everyone's thinking. So not just the apes, but overall when we're talking about institutions, when we talk about other retail investors, and of course apes as well. Because we have always known apes are bullish. We know what we are buying, we know what we are holding, but with what's been happening recently, we're seeing more and more capital flowing into AMC. And recently we talked about how institutions view AMC as the next big opportunity, hence why we're seeing them accumulating more and more of AMC. And so when we did see AMC at a cheap price, no one was panicking. Institutions were happy because they were also able to get in at AMC. And so the very fact that we are still seeing is bullish right now, and we're up at 9% for the day, you can showcase, what is happening in the market right now throughout everyone and not just apes. And that itself is obviously a good thing. And then we're looking at what I've noticed. AMC barely moves up or down on the surface, but short interest continues to grow exponentially. You can only stay submerged for so long. It's science. And now we're already seeing signs of that. So obviously 9% isn't something to get excited over about. We've always talked about how AMC is already undervalued. Even if AMC were to go up 100%, 200% in a day, we wouldn't be surprised because we understand is that AMC should be at that price and of course even higher. And so the very fact we are seeing 9% isn't something to be excited about. However, what it does indicate is that these short shares that have been submerged for so long, as we're seeing them failing to compress AMC, as we're seeing them failing to obviously suppress AMC like they always have been, we're seeing the price going up. And so once we know that all of the short shares that they've submerged, all of the short shares that they've hidden in the past, all coming to the surface right now, all are being covered, then you'll know what to expect for what's coming for AMC. And so that's obviously what we are waiting on. You can see there is staging for a squeeze starting to happen low over. Might be a fake out, but I know swaps have not reopened, so the imbalances are out there somewhere. And so what this is talking about is firstly, we understand the situation that's going on with AMC and with GME as well. Now, we've already been seeing how AMC has shown so many good news recently. We talked about the fundamentals. We talked about the institutions accumulations. We talked about the restructuring of debt. There are so many things happening for AMC right now. On the other hand, when you take a look at what's happening to the short sellers of AMC, we had companies like Goldman Sachs who are selling their puts and buying calls, so flipping their shorts into longs. This doesn't mean they fully covered. This doesn't mean that they're now a short turned long, but it does showcase that they are worried for what's about to happen. When you take a look at some other short sellers as well, like Citadel, who's facing liquidity issues that we've talked about, when you take a look at Virtue and the problem they're facing, all these other short sellers as well, with their debts going up, with their capital all freezing up and drying out, we are in a very, very good position. And it's why we're seeing the cracks happening right now, why we're seeing AMC going up 9% in a day. And you have to understand what it means for this 9%, because when you see here, AMC stock trading over 85% off exchange dark pools for the second day in a row. Now, this is the biggest takeaway to get from here, and it's why I said to not be excited about a 9%, and it's why I also said I wouldn't be surprised if AMC went up 100% in the day because of dark pool. We've shown this already in the past. Now, yesterday, we already saw how the dark pool was over 85% in the off exchange. Today, we're seeing the very same thing again. Now, what's important is that we've shown in the past about how most of the orders that's going through for AMC has a clear difference. The case for this is most of the sell orders that are hitting for AMC are on the lit exchange, whereas most of the buy orders are then actually routed into the dark pool. What this means is that the things that affects AMC's price, the sell orders in terms of negatively, they are actually affecting AMC. The orders that are supposed to help AMC and increase its price, the buy orders, they're routed into the dark exchange. They're routed into the dark pool, where then it's not having any effect on AMC whatsoever. We've seen this in the past before, and it's the biggest reason for why we're not seeing AMC run. Now, the reason why I say this is because, going back to what I said earlier, this is the reason why when we do see AMC go up 9%, we know that it's not its true potential and that it should be way higher than that. Furthermore, you have to understand is that there is also, of course, another way for them to suppress AMC, and that's obviously by creating synthetics. However, you have to realize every AMC share bought by retail investors is one more share short sellers need to find when they cover. And so this is something that I have always talked about. Now, we've known the methods how shorts are obviously suppressing the price of AMC. We've just shown you with the dark pool. We've shown in the past, of course, with FTDs, tokenizations, and of course, synthetics as well. However, we also then know is that when we are buying synthetics, we're not only forcing shorts to put more money to create these synthetics and pull it into the books, to pull it into the market, but when they have to buy it back, we are also increasing the floor price, the exit price, the price of which the squeeze price should be at. And so that's the power that we have. And we're already seeing the effect of buying up the flow. We've already bought the flow 10, 20, 30, potentially even 50 times over for AMC. And what we are seeing right now is the effect that it's having, because with what's going on right now, with everything that's happening, the lack of liquidity, the lack of capital by these short sellers, we are going to be seeing how all these positions will be forced to cover when they don't have the money to continue this whole act of suppressing AMC. You can also see fundamentally how well not only AMC, but of course just everything is doing. Within minutes, tickets for Universal City Walk have nearly completely sold out. We can take a look at here. And so this is what we're talking about with just how well we're going to be seeing the fundamentals of AMC going into the future. And it's the most important thing. One of the biggest reasons is because short sellers clearly want AMC to go bankrupt so that they don't have to cover these shares. And now what we've seen is that slowly the short sellers who want AMC to bankrupt are going bankrupt themselves. They're running out of money, hence they need to lend more. They're trying to borrow more money. They're selling off their assets at cheap prices. They're being forced to cover some of their positions. But then you take a look at AMC, and we're seeing how AMC's revenue is not only increasing, the operational costs are decreasing, their interest payments are decreasing, and what that means is obviously going to be more profit for AMC, and obviously allowing AMC to go in to have a healthy cash pile, which allows them to do even more things, and that ultimately just screws the shorts over. And then you take a look at GME over here, where we can see breaking extremely rare big pre-market Chicago exchange volume on GME. So not only are we seeing buy orders happening on AMC, we're seeing that happening on GME as well. Now, both these things are very important because it does showcase why we're seeing recently how everyone's been trying to suppress AMC and GME. We talked about the dark pool, we talked about the FTDs recently, for those of you who've been paying attention. Like I said, dark pool usage has been going crazy for AMC. FTDs numbers have been going crazy for GME, but it's all starting to make sense now as we're seeing more and more people buy into AMC and GME. And again, the reason why they did that in the first place does seemingly look like they knew the opportunities that people were going to see in AMC. And so the only thing they can do is to suppress it as much as possible to obviously disincentivize people to buy into it and to push people and sway people away. Now, has it worked? Well, we won't know for sure because potentially some people have been swayed off, but clearly we're seeing how there are cracks in the wall right now. And then you can also see other shorts using small or even bankrupt micro caps to hide their counterfeit shares of very sold stocks. MMTRP was first example last summer, a counterfeit GME shares being hidden, and this is what we're seeing. And just going back to earlier with what we said, the methods that these shorts are using in order to suppress AMC, in order to suppress GME, This is all out there that we have been trying to expose for a very, very long time. When you take a look at AMC, you compare it with its competitors and you wonder, how are IMAX doing so well? How is Cinemax doing so well when we are in the same industry? Well, this is why. It's not because AMC is behind them. It's not because AMC isn't doing well fundamentally, but it's because they're suppressing the price of AMC and not letting us see where we really should be. As always, none of this is financial advice, so do take our second of soul. Make sure to do your own due diligence research, and I'll catch you guys next time.